Hey traders, this is Christian from Hertz, Tribeca Trade Group, with a trade idea on Alibaba. So what I'm looking at is a couple catalysts for Alibaba that are coming up, and today is October 20th, and in a couple weeks they have Singles Day. Singles Day is their big event where they go ahead and display what they're going to have for sale. That's 11/11 for Singles Day. And what I've noticed previously is there's been a run up into their Singles Day event, and this is SPY. I just want to bring up what this stock did last year from this time last year. So 10/20 of last year, stock price was at 71.79, and it ran into Singles Day to up to 81.43. What was the percent gain over that time? It was 11.4%. So that is what I'm looking at for. And then of course you always want to compare. Hey, what did the S&P do over that time? Was it a stock specific move? Did everything move up? Well, the S&P did do pretty well there. If you look at the same time last year, 10/20, 2015 to 11/10, the S&P ran up 2.7%. So when you take the difference, it's still a nice gain of over 10% for those weeks leading up to Singles Day. So that's the catalyst that I'm looking to play. Note, Baba also has earnings as well, so you have to be a little bit careful of that. You have to be cognizant of that. They do have earnings coming up on the 2nd. So, this is a trade for kind of two different catalysts. Call it Singles Day, call it earnings as well. So, that being said, with the implied volatility moving up and most likely moving up going into earnings, there's a structure that I want to look at. You don't want to buy calls outright because of the volatility. We're going to look at a call spread, and we're going to go ahead and look at what the implied move is of the options on 11/11. So there's actually options that expire on 11/11 that I want to take a look at. No reason to go longer than that. We're not looking to play the move after that. I'm actually going to want to unwind this trade actually before it hits Singles Day. So what I want to do is find the implied move. How you do that very simply is you take the at the money calls that expire for the week that we want to do the trade, which is the 104 calls. You take the price of that. That's 420. Excuse me. Let's go mid market, so about 425, plus the at the money put options, which is 425. So basically just about the same. And then you add that up, and then you divide by the current market price. So what do you get for the implied move? About 8.2% is the move that we're looking at for those options. So 8.2% is the implied move. I want to figure out where that's going to get us to. So we could take the current stock price, which the close is 103.85, multiplied by 1.082. So that's going to get us to 112.35. So that's what the options market makers are implying for the move for these options. So there's no need to go above that. So what I'm going to look to do, being that you could see that the options are rather pricey, I'm going to go a little bit outside of the money. So I'm going to expect some move here. And by the way, that 8.2% implied move, based on last year, again, that move was 13%. You take away what the S&P did. Let's take that for what it is. The S&P, like I said, was close to about 2.5%. So you've got about a 10% increase. So I think you have an advantage there. If it does something similar to a run up going into Singles Day, that 10% move is greater than the implied move of the options. I like that. So if we go back to the option pricing, I want to do the best risk to reward here. I don't need to go above 112. So what I'm going to do is I decided to pick the 106 strike. So I'm not going at the money, going a little bit above just to spare myself some expense. And you could go ahead and take that price. We'll use 340 or 345, let's call it. Minus the price of the 112. Again, I'm using the 112. I'm using the implied move. of about, let's call it 155. And you get into this, you can get into this call spread for about $1.90. All right, the width of the spread is $6. So the most you can make, if you take $1.90 minus 6, the most you can make is 410. So that's what I would be looking to do. Do I think it's possible? Last year is a little bit different. The stock, didn't have a run up. The stock has had a nice run up, obviously, from August on and so forth. If you go to, let's see, what chart do I want to use? If we use a 2-year chart, just so we're capturing last year, you could see that the stock has had, did have a run up there as well, right here. September onward to 11.11. Actually came in a little bit beforehand. 11.10 is right here. So we've had a similar run up here, and we've actually come in a little bit. So we're not on the highs. We're on the 50-day moving average. So a little bit more extended than where we were before. Before the stock was in a downtrend. Now the stock's in an uptrend. So we've got a little bit of bumper room. So the performance of the stock again last year did 12% from 10/20 2015 into the singles day. We're giving ourselves a little bit of a bumper room. We're not going out 12%. We're doing a little bit less. So what you can also do, if you're looking to take on a little bit more risk, is you can sell a put spread as well. So I'm not going to go through that example, but that's one trade that you could do. You could check the implied move, which again is 8.2%. Subtract that percent move from the current stock price. It'll get you the implied move on the other side, and you can actually make that into a spread on that side. So you're selling a put spread and you're buying a call spread. So there you go. So that's the trade for today that I'm looking at for Alibaba. I actually put the call spread on today. That exact strikes. I sent that out to our members, and I may look to do to sell that put spread actually tomorrow. I thought about it tonight. That's a trade that I want to do. So we're always trying to do clever trades like this at Tribeca Trade Group. You can go to our website, TribecaTradeGroup.com. You can go to our product section, and we talk about these trades all day long in the trading room. So you can sign up here. Here's our annual subscription, $2,000 right now. We're actually going to be raising the prices shortly on this. You can get in for a month right now at $1.99. Again, this price is going to go up once we get into November. So thank you very much for watching today's video on Alibaba and the sales day event. Have a great day.